Scott Bauer, Trading Advantage, joins us now for the Trader Rundown. And Scott, I'm wondering, is there anything technically we should be fearing or happy about in this market?
You know, the one thing I've really noticed is the NASDAQ market. And with the nice run up that we got yesterday, a lot of that was based off of Netflix earnings. But I think that there's some very good potential for next week with earnings from Apple and Google and Amazon. But what I've noticed in the NASDAQ is the trend, the 50 and 200-day moving averages have been really forming a base. And it has been moving up, slowly, incrementally, which I think is a really good thing. And the NASDAQ, more than anywhere else, is kind of an overall index that I see probably has the room for the most upside in the next few months. And if not the most upside, at least the least downside, just based on technicals.
You are watching American Express coming out with earnings as well. So what do you see happening there?
I think they're going to buck the trend of the financials that we've seen report on the good side here. Technically speaking, it's been a tough go for AXP to really rise above the 50 and 200-day moving averages, which is where they're at right now. And they've just been kind of stuck in the mud. I'm actually taking a short position, Angie. I have some put spreads on, some very inexpensive put spreads going into earnings, which are going to be after the close later today. This is from a technical standpoint, and I think from a fundamental standpoint, one that you either want to stay away with or kind of play to the short side.
Where do you see this stock potentially falling to then?
I like the mid-40 range.
Mid-40s, okay.
I'm not expecting a huge drop, but if you look at it in a percentage term, it's 10-11%.
Great call on Goldman Sachs, by the way.
Thank you very much. Even a blind squirrel, right? But thank you.
No, that stock soared yesterday. Thanks for coming on the show.
Always a pleasure.